Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend and creator of material for my online course and friend of the channel, Mr. Matt, the mortgage guy. How you doing, sir?
I'm good, Mike. How you doing?
I'm doing very well. So, hey, one of the things I wanted to do here after episode one, where we kind of dove into Barry Habib's prediction that rates will go up and then retreat in 2022, is I want to go back and just kind of reminisce about 2018. 2018, for those that don't know, was the last time the Fed, Powell, tried to raise rates and push it and reduce the balance sheet, right? The Fed now is going to taper, which means buy less stuff, raise rates, and most importantly, start selling bonds. And it's that third one that I think tripped up the market. They have talked now for 2 days in a row about accelerating, reducing their balance sheet. And dude, I want to go back to 2018 because the Fed has tried this before with a much smaller balance sheet, and it got ugly in Q4 because they went one time too much. And as somebody that's been in the business, I thought we should talk about it. What do you remember about Q4 of 18?
Yeah, I mean, I remember, I think sometimes with the market, anything that happens quick can kind of shock, right? Mm-hmm. And I do remember rates probably got near 5%. I think they got 4.75-ish. And if I remember correctly, because I think I remember following like Meet Kevin, and he was just like, oh, there's a discount, stuff's on sale, it's 10% off, I'm gonna go out shopping. Yeah. In retrospect, it was a great freaking plan, right? Because if you got 10% off in 2018, then you were getting great deals. But it was probably a too much, too fast. When I looked, I think one time me and you were looking at, I was trying to look at like my production and how much business I was doing, where, sometimes it's hard to tell if you've got a busy mortgage business, people are in the market to buy at 4.25, 4.5, 4.75. It really didn't show like any ill effect on my mortgage business. But I think for the real estate market, it might be like a positive thing, as much as I don't necessarily think that all markets are the same and today's market wouldn't have the same reaction. We actually saw a little dip in price, I think.
Yeah, I think there was, what I remember about Q4 18, because again, I was already retired at this point. I think that was the first full year I'd been retired. So I was starting to spread my network with flippers, right? Because that wasn't something I did. Right. In 2018, I think we flipped 18 homes or 17 or something like that. But I was starting to meet more and more and like doing what I do, right? Growing my network. And I remember talking to flippers because I'd always done rental stuff, right? Older homes, below the median, very safe, just where I'm comfortable, right? But I remember talking to a couple of flippers who in my market were flipping above the median. Like, I don't know what the median was in 18, call it 250. And they were flipping 300. So it wasn't like they were doing $1 million homes, but they were above the median. And I remember them talking to me between Thanksgiving and Christmas, just bemoaning that their open houses had 0 people show up.
Wow.
Right. And it's funny to think about. Again, I think Powell tried to raise rates like back-to-back meetings. And I think that was like the 4th or 5th in a row. And they were trying to reduce their balance sheet. And it just, rates shot up. And it's not like values fell everywhere, but transactions stopped. And if you're a flipper, when transactions stop, your carrying cost doesn't stop, right? Your holding costs don't stop. And I remember a couple of them thinking, oh no, it's 08 again. Right now, obviously it didn't go that way, but right. They go from having open houses. I think, again, this is, who knows, it's 4 years ago, but open houses where 30 people would come in a weekend to 0 back to back. I remember being really nervous because both these individuals had been through at a much smaller scale the 08 crash and got hurt. So the Fed can cause an accident.
Yeah, it seems like forever ago, right? And I just pulled up some of my closings from December of that year, and 4.875, 4.875, 4.625, 4.875. Gosh, somebody would just think this is crazy, but an investment property at 5.625. Can you believe it?
Yeah, I remember. I was getting away with that. Yeah.
Right. Yeah. And right now, when you show somebody a 3.625, they're like, rates are really high.
They were 2 points higher.
Right. So it'll be interesting to see too, because it's sometimes it's really tricky, right? You want to do enough to make an impact and kind of meet your objective of like, hey, we're going to tame inflation. But if you do too much, the market's gonna get spooked, and we'll see how that affects real estate, because right now it's very interesting. I was at a real estate meeting this morning with 250 people, and Sacramento surrounding, Placer County, where a lot of these realtors are doing business, there's nothing on the market. Absolutely nothing. And, there's still demand, whether it's 3.5, 3.6, or a 3.25 or 2.9 interest rate. That's not, in my opinion, from a mortgage broker's perspective, taking a pool of 100 buyers and cutting it in half, and half of them are saying, forget it, I'm not going to buy. But with nothing to buy, there's still all this home price appreciation pressure, right? Because there's competition for the little amount of inventory that's out there.
Yeah. So one thing that I've done, I think we've talked about it. I think I even sent to you. I have this 50-year spreadsheet. So I actually went back and pulled out numbers from 2018 just because it's fun to think about. How many people were talking about a crash in 2018, right? Price, it's too high. It's too high. You remember that talk?
Oh, yeah, for sure.
It's kind of similar to today, but here you go. Here are numbers from 2018. And again, if you want the 50-year spreadsheet, it's in my free course, link below. It's on Teachable. Go get it. So $242,000. I think it was $242,400 was the median home.
Wow.
So in 4 years, it's up almost 100%. I think the median today is 456, right?
Wow.
Think about that. If you bought the median home in 2018, you're almost a double.
That's pretty wild.
That's nuts, right?
Yeah.
On top of that, again, the average mortgage rate for the period, it may have ended near 5. The average for the year was 4.54. So even the average for the period is up 1.5 from where it is today, or a point from today. I'm a big believer that we have a wage inflation going. So I actually got wage inflation and CPI for the year. We'll start with CPI. CPI for the year was 2.4%. There are people like Powell that thinks CPI will get there this year. I think he's crazy.
Right.
But hey,
I concur.
He could talk it into existence.
Right. Yeah. He's saying it every morning in his accountability mirror. We will get it down to 2%. We will get it down to 2%.
Affirmations or whatever.
I'm strong. I'm powerful.
And then just because I have it, wage inflation for the year was 2.9. So you actually had positive wage inflation, which that is important because I shared today you don't. CPI today reported 7%. Today, wage inflation is 4.6. So you're losing 2.4%. It's negative. In 2018, it was actually half a point positive. So
wow.
Arguably 2018 was a great year to buy. But again, the Fed can cause actions. And I think I'm calling it right now. They're going to do it again. We're going to feel it in Q2. They're going to stop tapering by the end of Q1. They're going to raise rates, I'm thinking, in Q1. And they're going to start, the one that's going to shock the system is when they sell. They're no
right. Well, they've got an $8 trillion balance sheet or something like that.
Yeah, it's $8 trillion, a little bit more. And oh, by the way, as of this recording, it's still growing. They're still buying. So it's going to be 8.5 or 9 by the time they get there. And they're going to shrink it. I think it's that third realization that nobody's appreciating. I think that just jacks up the system. We'll see what happens.
It's going. Well, that's why I say at the end of my videos, we gonna see.
We're gonna see.
We're gonna see.
It's gonna get interesting. But folks, do yourself a favor. Subscribe to Matt the Mortgage Guy's YouTube. This is what he does for a living. This is all the content he creates. It is a channel that I go to when I want to know what's going on. And if you want to do some mortgage, you want to buy some investment properties, buy a house, Matt the Mortgage Guy is helping my course members and everybody in my Facebook group, everybody on this channel. How do you want them to reach out?
They know where to go. Greatmortgagebroker.com. Fill out a quick form. Somebody on the team is going to reach out to you. And we just want to know where you're at, how we can help, and we'll point you in the right direction.
Very cool, man. Thanks again.
Yep.